Are you ready to finally buy a car but worried that a low credit score might stop you in your tracks? Perhaps you've been told that you need a score of 650 or even 700 just to be considered for a loan. The reality is that the absolute minimum credit score required for a car loan is much lower than you've likely been told. In this video, we'll reveal the real score range that gets approved and the right way to approach getting a car loan, even with imperfect credit. The answer may surprise you. So, what is the magic number? The truth is, there isn't one. There is no official, universal minimum credit score required to buy a car because every lender sets its own standards. However, lenders approve car loans for people with scores in the 500s all the time. According to Experian's data from the first quarter of 2025, individuals with credit scores between 501 and 600, a range considered subprime, accounted for 15.64% of all used car loans. Even people in the deep subprime category, with scores between 300 and 500, are approved for loans, making up 2.39% of the used car market. It's not the majority of buyers, but it demonstrates that you can absolutely get a car loan with a score of 550, 520, or even lower. Now, here's the smart first move. Before you start applying, you should know exactly where your credit score stands. You can check your credit score right now in just a few minutes using a trusted credit monitoring service. You'll get your full credit report, FICO score, and real-time alerts for any major changes, all in one place. And the best part? It's almost free. I've dropped the link in the video description. Go check it out before you talk to any lenders. Now, while getting approved with a low score is possible, it comes with a significant catch. Securing a loan is one thing. Securing a good loan is something else entirely. The price you pay for a low credit score is a much higher interest rate, and that rate can cost you thousands of dollars over the life of the loan. To illustrate this, let's consider a real-world example. Imagine two people are buying the exact same used car for $25,000 with a 60-month, 5-year loan term. Our first buyer has a super prime credit score of 781 or higher. Based on Q1 2025 averages from Experian, they could qualify for an interest rate around 6.82%. Their monthly payment would be about $493, and they would pay approximately $4,565 in total interest. Our second buyer has a subprime score, around 580. They are approved for the loan, but at a much higher interest rate of 18.99%. Their monthly payment jumps to $649. Over the 5 years, they will pay more than $13,900 in interest. That is over $9,300 more for the exact same car, all due to the difference in their credit scores. This is the trade-off. Understanding this, your strategy should be tailored to your specific credit situation. First, for the first-time buyer with no established credit history, the main challenge is proving your reliability to lenders. Your best course of action may be to connect with a local credit union, as they often have first-time car buyer programs. Securing a cosigner with good credit or providing a substantial down payment will also significantly increase your chances of approval. Next, for those with damaged credit, scores in the low 500s to early 600s. Your primary goal is to take control of the financing process before stepping into a dealership. The most powerful move you can make is to get pre-approved for a loan from your own bank, a credit union, or a reputable online lender. This accomplishes two things. It confirms you are eligible for financing and provides you with a benchmark interest rate to use as a negotiating tool. Furthermore, a larger down payment of at least 10 to 20% demonstrates your commitment and reduces the lender's risk. Finally, for the person who says, "I need a car now," if your credit is low and waiting is not an option, it's essential to be realistic. You may not get your dream car today. Focus on a less expensive, reliable used vehicle. View this car loan not as a final decision, but as a tool for building credit. The objective is to secure an affordable loan, make every payment on time for 12 to 18 months, and then explore refinancing for a much better interest rate once your score improves. To summarize the game plan, first, know that you can get approved for a car loan, even with a score in the 500s. Second, understand that a lower score results in a higher interest rate, which has a real financial cost. And third, You position yourself for success by preparing with a down payment and a pre-approval, and by being realistic about the vehicle you can afford today. A low credit score isn't a permanent barrier. It's simply a temporary detour. By taking the right steps, you can navigate the process effectively. If this guide has helped you feel more confident about your next car purchase, please like this video and subscribe for more content to help you master your personal finances. We also welcome you to share your experiences or questions in the comments below.